All right, all right, all right. I think we're live now. I do apologize about that. Um, Come on. Um, what's up, guys? How's everybody doing tonight? What a day! What a day! What a day! What a day! Sorry. So a couple things. A couple things we had to contend with. All right. One. There's like all kinds of smoke out front of the house. My mom just got home from Florida again. If you don't know, I've had a lot going on. Okay, I lost a cousin of mine. My grandfather's in the hospital. He's doing better. Um, so she's here picking up the dog that I was watching for the past couple days, and yeah, so that it's been a real hassle this week, and things happen for a reason, guys. You know, the market's been slow. Stepping on my charger. The market's been slow. So and between my cat, if you've been on the streams, you guys know what I the other night I was up all night because my cat's walking on me, and they're just she's been sleeping all day and going out all night because the dog's sleeping. So we have that and this smoke. This I don't know if you guys have heard, but this what's up, bro? What's up, my boy Colin, man? How you doing, bro? Yeah, isn't it? It shit's crazy. Like it just came about like this afternoon. You could really see it. So and then okay, so my mom picking up the dog, and then I had what you call it I had that smoke, so I was feeding the cats real quick. But then I went on YouTube, and it was something about I guess when I was live. So I guess with the copyright or something, there was a something for that Apple thing, but they disregarded it. So I guess Apple may have sent it to everybody, but I didn't play any sound, and I'm pretty sure it's only if you play sound. From I haven't read the thing. I need to read it. I need to read it. Just I just when do I find the time? I got you know what I mean. So I would just want to get that out of the way. If you could like, share, and subscribe, I greatly appreciate it. Somebody that could really use this information that we put out. Um, you never know who it might help. Okay. So, with all that, tomorrow and Friday, you guys better be ready because I'm gonna be ready. I'm gonna be back to my regular schedule, getting sleep at night, waking up at the ass crack of dawn, and getting things on the table so we don't miss things like this. Let's bring this up. All right, we can go ahead and do the lesson right now. I was eyeing this up, so I was just going through a list before I came on. MGOL. I gotta get, you know what I mean? I gotta turn that thing off before I take a drink. I don't mean to do that to you guys. So MGOL, guys, listen. So this is gonna be a whole different level or a whole different lesson. Okay, I had a couple lessons for you guys. I'm gonna need a bigger boat. I'm gonna need a bigger boat. I'm serious. Like I have so much shit on my desk, and I can't fit it all. I'm gonna have to get a bigger one. Seriously. Um, MGOL. We're going to get into GME. We're going to get into the market. Everybody is saying that the markets came down because of Canada's interest rate. I don't believe that. I don't believe it at all. I don't think that the market really gave a shit about it. If the market gave a shit about it, you would have had, and I'm going to get back to MGOL. All right, you would have had. Let's see. Let's find out. It came out at 10 o'clock this morning. I'm pretty sure. So 5-minute chart. This is the dollar, United States dollar. All right. Well, I think first off, what we need to do is do a chart analysis of the dollar. So I want you guys to know. All right, this is another lesson. If there is something that the market cares about, I'm going to tell you right now, you're going to see it in currencies. There was live news at the bottom there. You're going to see it in the currencies. If the move in the equity markets are going to be like if they're going to price in something, whether it's interest rates, whether it's a bank going up, whether it's something I can't even think of, just something random, war, anything, something with China, something with Germany, who knows? The currencies are going to price it in first. Well, they're going to price it in along with the markets, and you're going to get a big currency move. Well, it seems to me that we topped out here at this level. Now, I could probably just put a line, and I can go back to the daily, and I'm sure that there's something there that it's rejecting off of. All right, because the charts tell the story. So, Canada raised. They paused, and then unexpectedly, today, they raised. Now, that's just a story that's going around with everybody. The markets didn't expect it. The markets did. Get the hell out of here with that. The IWMs were up. The Dow was up. The S&Ps were barely down. The Qs got hit tech. That's a pullback. And I'm going to show you with the volume, guys. So let's just call it what it is. And what I think it is a pullback, a profit take that we already called yesterday, the day before, that we said, look out. This is why I'm in SPY puts. Now, I have a very small position. I have leaps. I have puts all the way over until January. Okay? I don't even know. We break 430. I'm getting out of those too, and then I'll just get back into it because I'm starting to think now we're just going to need more time. I've brought it up on the interest rate with the unemployment and the Fed funds rate. You tie the two together, do the math on them. It's about a year. All right? From peak to trough of the unemployment, you know, from when they stop, from the last interest rate hike, they can pause and then they lower, and then you see, you know, the interest rate. They don't have to pause or, you know, they can just keep it. It doesn't matter what they do, but at peak, all right, it's roughly a year. Then you see the unemployment rate literally start to tick up. And I mean tick up. So let's go here. What happened? They say the Canadian interest rate hike that was not expected is what caused the market to go down. Well, the market was barely even down. It moved, what, $3 whole? I'm pretty sure the markets don't give a shit about the Canadian interest rate. If they did, I'm going to tell you right now, we were down at most during the day 0.3%. That's it. That's it. I mean, come on, guys. So I just want you guys to not listen to everything you hear because it just helps them tell a story to make themselves sound smart. There was no reason. The reason the markets were down in certain sectors is because this 430 level is a brick wall, and you're going to need a catalyst to break it, which is Jerome Powell not giving us interest rates, or CPI, more importantly, CPI coming down month over month, coming down lower than what it was last month. That's going to put us through 430. All right, that is the catalyst that's going to put us through 430. All right, you could get some other, you get Russia pull out of Ukraine, like, other than like those like 2-3 major things, the Canadian interest rate ain't going to do a damn thing to this market right now. It's not, the market doesn't care about it. The market wants to know what Powell's going to do, which we already have an instinctive feeling that he's not going to raise rates. I don't think he's going to, unless you get a CPI number that is higher than what it should be. Because last June, guys, last June is when we hit 8% on our CPI. Was our first 8 handle print, I want to say, around June, and then it came down a little bit in July, hit in August again with the 9, or it was in August, September. So we are peak CPI from last year. All right, so the markets care about that. They don't give a shit about the Canadian interest rate. I assure you that, because if that was the case, the IWM would not be up. That's a risk. That's your regional banks. That's your more riskier equities. All right. The S&Ps would not only print a 0.3%, a $2.50 move, $3 move, high to low. All right. So the dollar. Let's get back to what I'm trying to show you guys. The dollar. This is where the dollar made the decision at 3 o'clock in the morning that it was going to sell off. All right. The dollar's also at a area of resistance. The dollar made up its mind here. Okay. The dollar didn't make up his mind at 10 a.m. this morning when the Canadian Prime Minister or whoever does it decided to raise interest rates. Okay. Why did they decide to do it? I don't know. I don't know if they got a higher number or what it was. Maybe they just want to slow things down. I don't know. All right. Again, we got the camera, guys. If you didn't notice, we got the camera up. It was freezing on me, and I think I got it good. I think I got it fixed. So 310. All right. The Canadian interest rate hike was at 10 a.m., if I'm not mistaken. I can't wait to get into this MGOL. It's a really, really good. There's a really good lesson to go from there, and there's an even bigger lesson that's going to come with MGOL that could possibly happen tomorrow and the Friday. So get your sleep, and get ready. I really think that we're going to get some volatility in small caps. I mean, it's a possibility. The possibility is there. And we'll look at other small caps and see how they did in comparison to when MGOL took off. Because it's really important. You guys need to know you need to know the seasons of different things. There's a seasonality and there's a reason to why things do what they do. All right, and I think you guys are really going to like that. 4.75% at 10 a.m. Let's see, did anything happen at 3 o'clock this morning? Okay, ECB, European Central Bank, 350. Now, I will tell you, they care more about Europe than they do Canada. I assure you that. Balance of trade. So we didn't have anything at two exports. You know, did it come in like in a crazy number? No. So it's like right in line. Just over. Okay. So we didn't have nothing really. Foreign exchange reserves, 3.17 trillion. Previously 3.2. So they're dwindling their foreign reserves. China is. Okay. So we have nothing at 3 a.m. So that tells you right there the dollar was on resistance. And again, why are we looking at currencies? Because if the move in the equity markets is a result of something happening, the currencies are going to move. The currencies will move. All right, that you guys listen, if you guys ever see news or something, just look at the currencies. If you see the currencies just ripping whatever, if they're moving, then that is important data. Write it down, write down the date and put it on your chart the day that it happened. Let's just say if you come down from the banks, like the banks, we had that back in February. The banks, the regionals, the KRE has not gotten back, whatever the ticker is. It has not gotten back up there. It's trying to get up there. The IWM is just getting back to the SVB level. So you got to put those levels in. All right, the S&Ps have already broke it. The Qs already broke the banks. So now we got to see what the IWM does. These are the kind of things that you need to know in the market. So when you get Powell, let's just say if he does raise interest rates, you're going to want to jot that down on your chart wherever, saves that date. Because if the markets sell off and then you go to recover it, then you're going to say, if it takes it back in like a month, 3 weeks, then you're going to say, all right, so we've taken back the interest rate hike on Powell. Do you know what I'm getting at? That's how you got to start looking at the market. So we had nothing at 3 a.m. So I'm sure if there was nothing at 3 a.m., we have the daily chart I'll just bring up. I'm sure it'll probably be a 50-day. There'll be a reason. No, there's not. What is it doing though? So it did. It is in an area of resistance, guys. So this talk, you're going to get it on CNBC. Look at this pennant, guys. Look at that. All right. So, no, the markets didn't give a shit about the Canadian markets. That's just the dollar putting in a bull flag. And guess what? It looks kind of bullish. And if we want to, we could measure this move. All right. I do this all the time. I do this in chat. Guys, free 99. Come trade with us. Join in chat. We come up with ideas just to help us all be a better trader because we only have two eyes. We're only one person with two eyes. We can only see so many things. GME earnings, lotto put, but I completely forgot. I feel, bro. I know. I was thinking about it. So the options were so cheap that I thought about it. I did too. So when I went over that, it was like kind of going up, and I'm like, maybe it's going to go down. Or no, it was going down. And then if you notice, when we go to the GME chart, you're going to see how at like 12 o'clock, it started going up. If you go back to all the other earnings, it doesn't happen all the time. So the ones that I see that go up, so you'll have like a small, tight price action. Like the candles are small, and it just goes up all day. And then earnings came out this quarter, and it would shoot up. Now, the opposite to that, now this is just a percentage of how many did versus how many didn't. I'm going to tell you about 75% of them. So even if you just bought like some stocks that really weren't like people paying attention to and the volatility wasn't like too crazy, it actually gave you an up move. Like if the stock was up all day, it went down. and if it was not up all day, but if it like just went back and forth, up and down, but in up like a slight uptrend, it usually sold off, and the vice versa. If it was a slight downward price action, but again up and down, it usually would go higher. The only one that I remember was like Amazon. If you go look at Amazon, it was like nice and tight all day and then shot up, I think, or it was Google or Amazon or one of the big tech companies. But I noticed that this earnings season, and I was going to put it in play, like just buy like something in or out of the money. Like I think you've seen it with like FSLR, ENPH. I think ENPH was going up, and then it had a bad earnings, thinking went down, or it was either First Solar, or, so I don't know. You just have to go back if you wanted it and just look at the day that it put in and then see what the earnings were. You just have to worry about the next day because it can just revert back to roughly where it was. And if you're in options, then you're just like fucked because the IV isn't there in the morning. So because options don't trade overnight, so there's no volatility to be priced in those options. So they do decay, but then they pick back up, and then it's like you barely make any money or you break even. So you got to think about options like that. You're going to get this nice volatility priced into it. The stock moves at earnings or at the earnings call, or if it makes a move and then takes it back on the earnings call because it was a better than expected earnings call. And then in the morning, it's like just about even and you've lost your premium. But then it gets picked back up again because traders are trading it, like especially if there is a reason. So I'm going to have a crash course, guys, and I'm going to post it on here on YouTube, and I want you guys to follow it. I mean, as far as what you should be doing, like the checklist, okay? It is going to be a checklist for your trades, and I think you guys are going to really like it. It's something that professional traders use. All right, and when I post it, I will let you guys know, and I think you're really going to like it because you're going to have a reason why. You're going to have the news because you're going to have liquidity, which means you're going to have movement. You're going to know your 52-week lows and highs, your year end, and then you're going to be able to put it all together, and then you're going to have your movement. You need to know your ATR. You need to know your ATR when it's like a not so volatile day versus like a volatile day, like Tesla. Okay, I know with Tesla, I can get $4 or $5 on like a regular day when nobody's trading it. On a high volatile day, or I could probably get like 4 to 6. 4 to 6 is Tesla's like range on any given day. But when it gets going, you can expect 10. You can expect I'm going to say $8 to $12. Definitely 10 though. I'm going to put it at a scale at 10. A non-regular day, I'm going to say 4.5, maybe 5. Do you see what I'm saying? So I know these things when I go to trade, and it helps me with my entries and my exits as well. So these are, and this stuff takes time, guys. And it's like, you wouldn't know this to think about stocks like that unless you were told, So I hope that kind of helps with just knowing the stock that you're trading and having a basket that you can just, like, if there's nothing really going on in the market, a basket of stocks that, like, if you have like 4 or 5 of them that you watch, like, where they're at all times, and you can just trade them, like Apple or AMD or an Nvidia or what have you, in Amazon or Google. Like, you just know the price action. You know that it's at the bottom of the range, so you're buying calls. You know when it's like oversold or overbought, so you're just taking profit and you're just working it, getting your base hits, your doubles, hell, even a triple, And then you get the earnings days, like we're gonna have GME tomorrow, or this small cap that's popping off. Could give you some real home runs. So we're going to get into that. So the dollar, real quick. The Canadian shit, you'll probably hear about it on CNBC. Just, if you can, try not to believe it. I'm going to prove you why. So this is a bull flag that the dollar's putting in. So look at the resistance level that it's putting in, and that's why it sold off. This did this to me earlier. Okay. So you see what I mean? Like, this is why the dollar sold off, because it was at the top end of the trend line. Okay, so don't believe the Canadian stuff just yet, because the market doesn't care. We have Powell next week, CPI, PPI, Michigan numbers. Like, it's a big week. I assure you, the markets did not give a shit about that Canadian interest rate. All right, so we're going to go to the Qs, because the Qs is what sold off today. So if the market, if they say the market cares about this Canadian interest rate hike, Okay, well, let's just see when the markets decided to sell off. It looks to me that we got to the resistance level at, this is a 5-minute chart, by the way. We got to the resistance level at 9:30, right off the bell. All right, right on the, that's saying, okay, 9:30, what is this, 5 minute? So 9:35, 9:35, guys, look. And then we get into 9:45, and at 9:50, you're already putting in a tail and closing below this range. You see how this pattern is nice and tight on the 5-minute? See how your VWAP's right there? And then it breaks VWAP, comes back and tests it. Now, it wasn't until 10:30, right? Or 10. Because we're still at 9:50 with the resistance of VWAP. So, because I just want to make this point. When you guys hear shit, like, that really doesn't matter. I just don't want you guys thinking that, like, because people say this stuff to, like, make you think that they know what they're doing. And this idea that we're making money in the stock market. Guys, it's not hard to make money in the stock market. It's hard if you make it hard on yourself. Okay? You do have to learn. You do. I hope I can help teach you that. But you just have to learn and give it time. I'm going to start doing lessons at lunchtime. You know, a lot of the stuff's getting cleared away. So I'm going to be on my shit like I was the last 2 weeks. Again, 10 a.m. So they had their interest rate hike. 4.7. They raised it 25 basis points. Whoop de fucking do. Again, we've already made the decision. We're going down, guys. Look at the volume. The volume's starting to pick up down here. You probably can't really see it. And then you got your 10 o'clock. You know, you've already made it resistance. You broke it, made it resistance. Really, you're making VWAP and the morning range resistance because it lines up with VWAP. I mean, there's just two things there to go off of. So the decision was already made. The dollar's selling off. All right. I mean, the Qs got hit. But let's go back. Let's trail this back to, we'll do like a 30-minute chart. Okay. The volume was a little increased. But guys, you're just putting in a double top up here at this level. All right. At the end of the day, I'm going to be honest. I don't think the market gave a shit about the Canadian rate hike. Look how the volume decreased at that. It's just to take profit, guys. I'm telling you, this run has been, like, there's a lot of money being made just on the first of the year. We have been talking about a profit taking in these sectors, guys. Nvidia, AMD, like these managers, fund managers are up a good amount of money. All right, if you want to see a high volume day, like I can scale back, and this is a high volume day where it's got volume all throughout the day at that level, which we haven't had much of it yet. I'd have to scale back. Like, this is a high volume day. Here you go. You got an 8 million share candles. All right. 8 million share candles. Here, you got a 10 million share candle. So, I'm just saying, you know, if it was that bad that the market cared about the Canadian, I don't want to stay on this too long, then the IWM would have not been up today. All right. The IWM would not have been up today. It is also coming to its level. So are you guys seeing what I'm seeing? So we pulled up the Qs. Let's go to a 2-hour. Fuck it. Excuse my language. I gotta not do that. All right. You see the resistance? You broke it with an increase in volume, guys. So if we stick this level, if we hold this level Thursday and even coming in, see, I don't know if it's going to give it to us by the end of the week. But if for some reason this whole, like, I feel like it's going to hold up. All right. I think it's going to hold up because there's nothing bad. Like, there's no reason for it not to. There's no necessarily any banks coming out and saying that they're meeting with an auditor or something. Or they're first, you're going to get, if a bank does something, you're going to get them trying to do an offering. That's what they're going to do. They're going to go to the market to try and do an offering. And what that is they're trying to raise money because they need it for deposits. All right. Okay, I thought my screen froze up. So we have some structure here, guys. So look, once this IWM starts to hang on this 186 level, don't get calls just yet. Let it sit there and pull back and hold it. And then you're going to get a random day where you can go in and look at the pre-market volume, and you're going to see that's heavier than normal. That also still doesn't mean to get calls. You have to watch the price action intraday, whether it's a 3-minute chart, a 5-minute chart. You're going to see let's see if I can show you an example of it. All right. This kind of is it, but these are, you're just so extended here. This is the type of day that, you get a big extension off through the level. This is one thing you can look for, the break and retest. You see that? You see how you just are ramp it right off the open? All right. And you bust through that level and then you pull back to test it. Right? You put in some tails, boom, it's off to the races. And you're blasting through these levels. And it's up here and you're like, man, I missed a move. And then you're like, you don't realize it's still only 10:20 in the morning, and you still got another, the half, you've only done half the move, not even, So I would let the IWM like settle just a little bit. I would let it settle and like find its footing per se. All right. And then what you can do is say, all right, the IWM has spent a day, 2 days consolidating here. And if the S&Ps and Qs are up, all right, if they're up, then you're gonna say it's you'll know when it's time, because so you have to see which one is leading. Like right now, Qs are lagging. Like the Nasdaq is lagging. It's been down red. Then it's the S&P, and then the Dow, and then the IWM. Like that's the order. The IWM has been leading. About like last week and the last 2 weeks, I was trading the SPY off of the IWM. All right. Again, though, real quick, you find your footing and hold, but the rest of the market has to hold up. All right. Then you get into the top of your range. Look for that to become resistance, and you play this range here, guys. If it holds up, let it get its footing, and then you just look to make $3-4, swing it. Get some time if you're playing options. Join us Monday through Friday, 7 a.m. to 4 p.m. All right. Look at this volume, guys, on the break through that level. What is this? This is what I'm getting at. This is SVB, guys. You're back to the banking crisis, so-called crisis. Well, I don't think it was that bad. It could have got bad, but the Fed didn't let it get bad. So now you've taken back the bank. You've taken back the reason why it was down in the first place. So now we got to see if it holds. Now the other separation is the bank ETF is what I'm watching, because if it can't, for some odd reason, get back up to this level, then there's a problem, and you just got to be aware that things may turn around. You see what I mean? The IWM is up there, guys. All right, this was the banking crisis. All right, and that's where the IWMs are. The IWM is back up in that area. Do you see how you can put the pieces together on a chart? If you know, are you serious? If you know, like once you have time in the market, you're going to be able to do these things. You're going to be able to do these things. But you have to also be told. All right, this was the bottoming out of it, and you turned it into support. You broke it on not so much volume, because I think that they still think that there's going to be like some issues, and I do too, especially if unemployment starts. I was trying to bring up the volume because the volume is so important, and we're going to get into that with the small cap that I think is going to wake up. So the volume's not too bad. All right. Now on the break through it wasn't too bad. They did try to sell the thing off, if you want, you know what I mean? Like look at that sell-off candle. They're like, no, things aren't right, but shorts got squeezed. So this is the volume that you do have to contend with if you want to get back to pre-SVB. All right, that's some pretty serious volume. And you can already see that I have this drawn on my chart, the volume, because it's important. I did this way back here. Not way back there, but I guess it was like a month and a half ago in March. So, yeah, this volume here, guys. Yeah, we're breaking up. We're going. Now, see how you got this volume here on the lows, which helped kickstart it? You just got to keep an eye on those things. And you just have to jot it down. Why? Like, what is this? What is this sell-off right here? This is when it started and nobody was talking about it. This is fund managers on the street knowing, like, hey, we got issues. Or this was probably when because what you'll see is Silvergate. Remember Silvergate, the crypto thing? They came out and said that they had to do an offering. And then 2 days later, they were just in the world of shit. Like a week or two went by, SVB. SVB came out and said that they were doing an offering, and that's where these banks went wrong. They came out and said they wanted to do an offering instead of like going about it in a different way. Once they let it know that they were in trouble, then the just word spread like wildfire, and then the deposit started. Okay, there was an issue like under wraps, but and then after they did the issue, that's when you had Peter Thiel and all them coming in, the venture capitalists talking about get your money out because they're having problems. All right, crypto was down. I don't want to just jump into stuff, so I want you guys to just think about that. The IWM is back up at the SVB levels, which is up here to your top left. All right, so the banks, the regionals are still down, so keep an eye on that. So again, just keep your eye. The IWM gave you guys a really, 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 really nice move. Gave us all a nice move. I was not I just had my head hasn't been in the game with everything that's going on, because this day here I didn't get sleep and I would have been long it. Like as soon as I know it stuck it pre-market, I'm sure I could go down, and you're going to see pre-market volume give you that hint. All right, the SPY, it was down just a little bit. Again, I bought some puts because of the environment we're in, and the puts are cheap. The VIX is at $13. That doesn't mean the stock's going to go down. Like I say, don't if I say I'm doing something, if like this trade, try not to follow me. I mean, you can follow me if you want. That's up to you. You do what you do with your money. I'm not a financial advisor, but I did this and I kept it small, guys. When I tell you I kept it small, it was that the risk or the reward outweighed the risk, because I expected what we got on the Qs, that profit taking that was today. I kind of think that that's going to play into the SPY, because once they get Apple, Microsoft, Google came down, Amazon, you had healthcare down. Those are the top 10 stocks in the SPY. So the SPY technically should come down. Now you're going to have the offset of, oil, banks, insurance. That's going to help keep the SPY up. That's why it's important to know what sector's going down. And if you want to play the overall index because it has liquidity, make sure you're in the right index. It's tech that's getting I'm not going to say taking the hit. They're taking the hit, but it's more profit taking than it is anything else. We pulled it up on the 5-minute on the Qs, and it shows you after the morning, it was just the volume slowed down a lot because there's a double top, and it's just, it's overextended. It's not that it's overextended. It's like it's not yours until you take it, and fund managers know that. So they're taking profit. They're taking profit because we're in an environment that overnight things can happen, and the Qs will be down 1.5% in the morning and then sell off. And positions like them, they work in and they work out. All right, because they got big money like that. They put on big size. All right, let's talk about the what was it? I wrote it down. MGOL, guys. So I was looking at this before we went live, and I'm going to get into a couple different lessons. I know you taught you guys, I was trying to get into some things there, but so let's go into this stock, man. This stock I think is new. I have to look on my other chart where this camera is, because Thinkorswim does this to me where it doesn't, it's got there could be more price action here to the left, and it's just not showing me. So this was a great stock, guys, to be in. This was a home run. This could potentially start the bigger move in the market. This is opportunity. This is almost like we're going to see tomorrow into Friday. Not only if this thing holds up, but you should start to see other small caps. So we're going to go through this. I'm going to show you guys a couple different lessons here. All right, because I did it prior. I can just see it. We're going to go to let's just say the afternoon. What time is this? 1500. All right, so we're going to say 3 o'clock. 3 o'clock, we're going to go look and see what else was on the list. All right, over on FinViz. It was just one that I pull up. It's not one I use every day. I have whatchamacallit over here. I have trade ideas and Squawk Box and stuff. So we have Farm, and we're going to just see what these guys did at 3 o'clock also. Okay, because MGOL I don't think was on the list early this morning, because I briefly went through the small caps because and I haven't played any really because I wait for something like this. It's not that I wait, but if I see it, I do attack it. I think I almost attacked one today or yesterday, and just nothing big because it's not time to put your foot on the pedal. you're going to notice, and I'm going to help explain it if you join us live, all right, right here, Ivy League Trading. It's free 99, guys. You're going to see if these small caps pick up. You're going to see out of my expressions and how I'm talking and what I'm doing that it's on, and I got my foot on the pedal. And that doesn't mean you should, because I have hotkeys. Okay, I have a stop loss. I know that there's a lot of volatility there, so I don't have to put up my whole account. I don't have to put up half of it to get a big move. All right, because it's going to come, just like Fed days, guys. On Fed days, make it easier on yourself if you know how to trade, and if you can get the movement, just go in with smaller size, because you're going to get big moves, especially if it really matters and you get the direction right, and you're just going to get paid. You will, and you don't have to sit there and sweat and be down $8,000, $9,000, $1,800 in like a minute. All right, you don't have to do that. I don't know what sizes you guys trade with and all that, but we're gonna get to GME. Thanks, Collins, bro. I appreciate you so much, dude. We're gonna get into that. I'm just trying to briefly go through it. I want to show you guys this MGOL. All right, so MGOL, I guess, popped up. I was probably falling asleep with this market and not getting sleep at night, just because of everything I told you guys that's going on. There's a lot going on, and tomorrow and Friday, it's game time. It's back on. So what do we have here? First thing I want you guys to know is I don't think that this thing popped up on the scanner until like later on, because for it to pop on this, it can pop on the scanner for like, because you can put in like new highs or like momentum, all kinds of different weird things that you could put in, and it may have popped up. But I don't think this thing popped up until like lunchtime, and then only like a few people saw it. I can tell, because why? There's only 750,000 shares traded. There's only 300,000 shares traded. I'm gonna tell you right now, a dollar stock, this thing needs to have even 1 million. Like, I know people that size in with, they go in and they're buying 10,000 shares. Now it's $1, so you don't have to spend as much money because it's $1. But if you got a group of traders that are coming in with $30, $40, $50,000, $60, $80, $100, $150, $200,000 on trades like this volume is going to be in the millions, especially for $1. So, and I think because it's $1 is why, because you don't have to put up as much capital, because $1 to $2 is 100%. So it's like, I want you guys to know this. If you don't already know this, okay? If you buy 10,000 shares of any stock, okay, a 10-cent movement is $1,000 on those 10,000 shares. All right, just so for you, the people that don't know, because size is a whole nother thing. If you start trading and you start making money and you actually get to a point where you're sizing in, this is going to be so important to you, because you could be this candle. There are people that are this candle or half of this candle. They get in, they are worried that they're not going to be able to get out because of the size. All right, there's some big boys out there. There's some fat cats out there that, I'm just saying, and for them, and that's the thing too, for them to participate, they need to see, like I just showed you, a 1 million share candle. Because if they want to buy 50,000 shares at $1, they're going to spend 50 grand. But 50,000 shares is going to be, what was this? See what I mean? That's 80,000 shares, guys. This is not institutional or other retail traders that do this for a living. Because I'm telling you right now, their stop losses are around 5 grand all the time, no matter what. Whether it's 10 grand, 5 grand, 2 grand, 3 grand, like that is their stop loss that they stick to. That is the most they risk on every single trade, so they have $1 million account. All right, and for them to buy 50,000 shares of this, all right, that's only 0.5 of their account. So think about it like that. So when you see small caps breaking out, you want to see, because I assure you, listen, I know them. I personally know them. And I know they will not get into a small cap stock unless it meets the criteria. The criteria is on $1 stock, like it needs at least a $1 million candle. On the 3-minute, this is a 2-minute. Now let me go to a 3-minute or whatever. On a 3-minute, now there you go. You got 1.5. Okay, they're thinking about it now. So they're like, man, I get a pullback. We got volume. We broke through the previous day, the previous high on an increase in volume, that next pullback, I'm going to tell you right now, they're buying. They're buying because of this candle, 3-minute candle with being over 1 million shares. So you're going to see, I'll explain it if this helps bring the small caps back, because I've been waiting. Like, I've been feeling it. I'm like, once I start looking at small caps, that tells me, like, the psychology of the market. If I'm starting to do it, I know other traders are doing it. And it almost started with FRZA. That was a couple days ago. And it just couldn't get there. But I'm telling you, I think it's starting. Because you had a stock like this today. If we had, like, because I think FRZA was like Monday or Tuesday. And today's what, Thursday or Wednesday? Today's Wednesday. So it was like Monday. But I felt this going in back to Wednesday, Thursday, and Friday of last week. But the overall markets were going up. So that also hinders the small caps. Like, if you have overall market moving up, that's where people are going to be. The market slows down. Then it takes a few stocks like this to get going. And then it's on. It's on to the races. You get in, you do a couple trades. If it's really on, and then you got to bring it back. Then you got to bring the pedal back. You step your foot on the pedal when it's the right time. But then you got to bring it all. You got to bring it back because it's going to die out. It'll last for a week, 2 weeks. It could last 3. It could just be sporadic for a week. I'm going to tell you right now, this could be the start of something. I was looking at tops today. For some weird reason, I brought up HKD and top. So let's go through a lesson real quick on this, guys. This is so important. I think more importantly, the lesson that I told you, if you're going to play a small cap, to like bring up the 3-minute or even the 5-minute and make sure, like if it's $1 stock, right? This is $1 stock. You got $1 million candle. Okay. For them to buy 50,000 shares, I just told you, you buy 10,000 shares. Okay. That's $1,000. So they know at $50,000, they're buying, or was that 20? So 100 grand, they're able to buy 50,000 shares at 200 grand. And they know for every 10 cents they're getting not because it's 1,000 on 10, they're getting $5,000 every 10 cents, guys. So that's going to bring them in. And what it does, I don't want to keep repeating myself, guys, watch the volume. If you start seeing small caps like go up, like this is the start. This started this stock today. Now you want to know what the float is, so you want to know if that thing's going to move or not. Okay, because you can see what the float is. Let's just say if this has a float of 1 million, well, you've traded the stock over twice. Like the full shares that are there, they've traded hands twice. Because you have, just on this 3-minute, you have like almost 2 million here, like 1.5 million. Yeah, 1.8 million. So you see what I mean? And it's easy to move. Like, you are literally the retail traders and institute. Like, you have literally taken. Everybody has taken hold of this company, all right? And now that's when shorts start covering. People start buying on top of it. Now, let's just say this has a 20 million share float. At $1, that's still possible. 100,000 float, or 100, like, I don't know, 100 million float. Like, it's going to be a lot harder to move. And you know what, guys? Look at this. Why might this have a low float? If my chart's not, if there's something I'm missing, I don't think I know, because it's a 50 days right here. This stock hasn't traded much to be able to do offerings yet. So there probably isn't that much. And that's why this was somewhat chosen. Maybe there was news. Sometimes you get news behind it. 60% of the time, 70% of the time, there's no news. It's just momentum. You get one stock like this to go, and then they all start going. And then you put your foot on the pedal. You get 1, 2, 3, 4 trades in. Boom. Go back. You can still trade, but dial down the size, because you don't want to lose it, because it's not going to last forever. All right. I think that's so important, because they charge a lot of money just to know that. Also, they charge a lot of money just to know the seasonality, like how things start with small caps. All right. Real quick. All right. Let's do this. Let's go through this stock real quick. You have 3 times a day in the market. All right. 3. A lot of people, you guys may not even think about this either. So you have morning, you have lunch, which I'm just drawing squares, till about 2. All right, there's lunch. God damn it. Just roughly. And then you have the afternoon. So what happened here? So we know we have three different types of markets during the day. You have the morning, you have lunch, and then you have the afternoon. There's three different sessions. 3 sessions, I should say. Morning, lunch, afternoon. You also have European market also trading here too, guys, in this morning session. So that's why you usually have the most liquidity and the most movement in the morning, because you don't have just us. You have European markets. You have other, they're really just European markets, which covers like the whole side of that country. So anyway, you have the morning. So what do you have here? You have a small little breakout. All right, you got a couple traders on here. Whether something started this, whether there was news, whether it was an email going out to people, whatever. All right, so we know we have 3 different types of markets. Sorry. No, I want to get rid of this. Remove. 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 All right, guys, this is a great lesson, especially if small caps start to take off. If they start, you're going to want to know this. And again, do not chase lunchtime breakouts unless the volume is there. Don't. Because you'll get a fill. I called it today on one. I was watching one because it was lunchtime, and I seen the I used the volume, the lunchtime, MACD, my Fibonacci, and I was able to say this is going to be a failed breakout, and sure it was. I think it did take off in the afternoon though, and because of this stock. So all these shorts are getting nervous with this stock. So let me get into it. Again, I'm sorry, I have ADHD. Just don't mind me. Just bear with me. I do apologize. All right, so you have the morning. The stock takes off. Nice big candle. Okay, nice big candle. Now you have very little volume. Now you have 100,000 shares. It looks like traded right here. Yeah, 100,000 shares because it'll take, yes. So 100,000 shares right here. So 100,000 shares at $191, or we'll just say, where's it at roughly? Right here. $1.40, guys. So you're telling me it only takes $140,000 to move this stock from 125 to 146? Do you know the percentage of that? On $140,000, it only took $140,000, less than $250,000, to move this company. It's because they don't have a lot of time on this exchange. If my chart is right, they haven't had time to do an offering. That's the other thing you got to look out for, is the offerings when you're in small caps. That's why you have to have a stop loss physically. I don't, because I have I have not only a squawk box, but I know how to read level 2. And I would teach you guys that on level 2. You'll have the LULD, or the LULD, which is on level 2 down here. There is a price in which the stock is going to halt at. Okay? And if that price is reached to the upside or the downside, the stock gets halted and it's on here. And then you have about 3-4 seconds, and what you'll see is your bid and your ask is going to be the same. And then you'll see the lull come up, the LULD, and then you'll have 3 seconds if it's hit. Sometimes it'll hit it and then reverse or go above it, and it'll keep it. Because the market maker's got to keep up with, there's so much order flow when this happens. You have shorts trying to get out, you have buyers buying it, and it's just, they have to pause it to get all these orders, situated, and have a not so chaotic market. So again, these traders move this stock from 120 roughly to 140. $1 to $2 is 100%. So they move this thing about, 120 to 140, I don't know, or to 150 it looks like roughly. Yeah, 146. If $1 to $2 is 100%, and $1 to $1.50 is 50%, then so that's still 30, 40, we're going to say 35%, just a number. So $120,000, or at most, we're going to say $140,000. Let's see here. Yeah, 150,000 shares traded at $1, roughly $1.20. Basically, $200,000 moved this stock 20 or 35%. Like, think about that. It only took that much money, which is a lot of money, don't get me wrong. All right. But in the grand scheme of things, when you have so many participants and 2, 3, 4, 5, 6 different countries trading at the same time, it's really not that much at all. It's not a lot at all, especially for the markets, for a stock to move on such little amount of money. All right, so you had that. It started, guys. Here's where it gets interesting, because this thing is just, it's not falling, and it's going. Now, if I bring up, it might mess it up, and I'll have to go back, guys. I want to show you the story. All right, because there's a story here. See, you can't even really see it. This stock is just moving because there's no sellers that are like, the shorts are not getting in, is what this is telling you. All right, you can see very little selling. This is profit taking. All right. I don't know what happened there, but Jesus Christ, come on, man. I might have to change up the charting software, and we're on a 3-minute candle. All right, so you're fucking kidding me. I'm sorry. I apologize, guys. I'm going to be quick. I promise. So you can't even really see the candles here, but there's nobody shorting this thing because they know what I just told you. They know that this stock went 35% on $200,000. It took $200,000 for this stock to move 35%. They're not getting blown up. They're not going to step in front of this thing. Now here might be a different story. Fibonacci. I'm not going to say shorts, but definitely profit taking. Right here, what time is this? 12:30. See what I mean about lunchtime breakouts? This is a prime example of everything in one stock. The sessions, all right? Everything, guys. This is why it's like this stock was perfect on a day like today to give you guys a lesson, especially if it's going to pick up. If this is going to pick up, these are the things you're going to need to know to make money. All right? Let's go. Where's our Fibonacci? There's our close. Boom. So, not doing too much there. All right. Let's go. I want this down. You guys see the volume. I don't know why it's so being difficult on me. Watch it move like crazy. All right. I just want to pan this in for you guys. All right. Just want to pan it in. All right. So look at this. So here's our high, and it's going to move because it's logarithmic. All right. So you have the stock take off from yesterday's close. All right. You have, which I want to push it that way. You don't have much. There's a little action here, but this is what gets it on traders' radars. So you had a movement. I guarantee you this popped up on a scanner somewhere, and then traders start talking about it. They get this move that's 35, 40%, and then they're taking their profits. Like they got in, they moved the stock. They know that this stock is moving. Whoever it was, group of people, 50 people that got to, who knows? Online, who knows? Who knows how they found out about it? There could have been news maybe. I'm not sure. All right. So this thing just trails up. It's just trailing up all day. Not all day, but up until lunch. 11:30. Trails up, makes a new high. Let's bring up our volume. And then I'm going to bring my fib up here. So you made a new high. And we are taking this fib from yesterday's close because we're measuring the move. All right, we're measuring the move. I could probably get rid of pre-market, probably help. Okay, so we have that. What am I doing? So we get into 12 o'clock, guys. Here's 12 o'clock. So you get this run up. Here is your new high. I know what I'm doing now. At 11:27, just before 11:30. This is traders, again, taking the money and running. All right, but it's not selling. All right, it's not selling. It's profit taking. Where did this stock sell off to? It sold off to the 38.2 fib. Okay, that 38.2 fib, and you have buyers sitting there because they have this Fibonacci drawn on their chart too. So as this stock pulls back, so you got a quick tail here. You see that tail, how it sold off, but it got picked up. It got picked up. Nice volume there. And look, you guys can probably barely see it. I don't want to mess it up. But this volume here on this small breakthrough here is the same as the morning. You just can't see it. And then add on that there's no sellers. There's no sellers yet. We're getting ready to come into lunch. You have 11:30 here. We pull back 38.2 fib. You put in a new high. It held the 38.2 fib. And traders that were looking at this through here, they said, all right, because if it broke and held VWAP, now they're looking at VWAP. If this tail closed down here, then they're going to look at VWAP and say, all right, it hits VWAP, I'm out. Because they probably got in here, or depending on where they got in. But what you have here is a small bull flag, kind of, but they're not worried about. They're more worried about the 38.2 and the Fibonacci, and the 9 EMA, the trade line, because this thing was riding it. It got up, they sold it. You know, this is profit taking again. 38.2 fib holds, and what do you get? Boom. After this tail, boom, you get them in again. Look, boom, boom. You see how can you see the story after this tail was put in? Slow profit taking, and all it takes is a couple people to say they put their order right at the 38.2 fib in front of it, and it moves. All right, you get a small little candle at the trade line, and then boom, they play. It's on. Boom, they play. It's on. Do you see do you see? This is the traders reading the chart and reading the tape. All right, I just accidentally moved it. This is why thinkorswim kind of frustrates me sometimes. All right, there we go. See what I mean? I barely touch it, and it just messes everything up. All right, again, here we go again. So now we're at lunchtime, guys. All right, remember this. We're at lunchtime. It's 12 o'clock. And they know that there's 3 types of markets. Morning, lunch, afternoon. This thing makes a new high going into lunch. It's at 12:30. It doesn't have to be exact. So we're going to take our fib and we're going to bring it up to this new high right here. Made a new high. What time is that? 12:21. All right. So we're just riding the trade line because now there's not sellers. You see how there's this? Come on, you got to be kidding me. I just want to show you guys this. It's very important that you guys see this stuff. All right. Let me make it as wide as I can because I want you to see where the selling orders are sitting because it's a logarithmic too. It's messing me up. I want you to see where the orders are sitting when they sell and when they buy. You see how we sold off here? Okay. What do you have literally sitting at the 9 EMA? You have orders at the 9 EMA. They don't have orders up here to extend a new high. It's 11:30. You have a wicked tail. It closed red, but they're still buying there. All right. Again, where did this tail go to? Roughly the 9 EMA. So you pull back. Now, this is when it breaks. But again, they said, we're moving our orders into and in front of VWAP. Because again, we know in our mind, this morning, it only took 100 and some thousand to move the stock 35%. They think and they know that if it doesn't do it today, there's tomorrow. All right. And it's $1 something. Oh, baby, it's my little girl. My cat. So again, we move on. Okay. So this starts the lunchtime climb. Okay. We're climbing, profit taking. Okay. It's like, all right, I'm in here at $1.36 and it's now it's 36 cents higher. I mean, I've collected 30 cents on a stock. You know, I have 1,000 shares, do the math. I have 5,000 shares, do the math. I have 10,000 shares, do the math. It's profit taking. They're going to take it. This is their job. This is how they live. This is what feeds them. All right, so we pull back. What did I tell you? So again, where are the buy orders? Where are the buy orders? They're sitting at the 9 EMA. Okay? So when this stock is so extended, it doesn't even have to be extended like here. The stock doesn't hardly move, but there's still orders holding it up because they placed their order at this price. $1.52 and just under it. You know, maybe they have it in front of it. Like just this whole little area is where your buying is. And you still have like hardly no sellers. That's this here is still only 200,000, 227,000 selling compared to if I do the math for all the buying. We have a lunchtime breakout. And this is when you got the big red candle. And why do you get the big red candle? Because traders know, professional traders know, you never, 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 I don't care what stock it is, you never trust a lunchtime breakout on decreasing volume. All right? It increased, but look at that sell candle. Like, that was it. This thing just ripped to $2. They're in it from $1.30 or so. They've got 80, 75, 60%. All right? Guess what? It's almost 1 o'clock. Again, where are the buy orders? Now, after this move here, what happens? This thing is circulating. This is on the scanners. Now it's circulating. All the groups, YouTube groups, I mean, everybody that's a trader is probably, like, not everybody, but now it's reached a point where all the traders are looking at it. Like most of them. But again, they know they don't trust lunchtime breakouts. So what happens? The stock just lulls. Just, you know what I mean? Falls asleep. 68.2. But what happens, guys? What happens? Look at this. This is the initial morning high right here. What did it hold when it pulled back from the lunchtime high? It held the initial morning high from the morning. It held the initial morning high. It broke it, okay? Well, I should say, technically, it broke it on what? All right, let's go back to here. This is the morning. What happened? It broke it on an increase in volume, guys. You get a stock, I don't care, big cap or large cap, small cap, mid cap. All right. You get a stock that breaks a resistance or breaks the initial morning high on increase in volume, even to the downside, the probabilities of that high holding as support now becomes even greater. So I want you guys to picture, where are the orders? Where are traders putting their order in? Because I'm telling you right now, they don't just market order in and buy. All right, like me, I set my orders. I have orders set to buy, and then I have my profit targets set to sell, and I let the computer do the rest. All right, you can do this. You can learn to do this. I can teach you. All right, it's not hard. You have where you want to buy. You have your stop loss. You do the math, and we can teach you whatever your risk, whatever you're willing to risk, what you're comfortable with. That's going to keep you in the trade, and that if you lose it, it's not going to hurt you. All right, you're not going to get emotional about it. You're not going to be put out of the game. So what do you still have, guys? You have orders sitting right at the initial morning high, sitting there, because they know this lunchtime breakout is going to come down. You usually don't trust it. But the one trust that you do have is that you did have an increase in volume at lunch through the initial morning high, through this high. But this was your initial morning high. Like, this is your boom, your wick. You come down and you kind of play with it and pull back. You didn't really break it there. You didn't break it on increase in volumes, So the stock kept climbing. It was the pullback and hold of the initial morning volume the initial morning high once you got the increase in volume. And then when it pulled back, guys, where are the orders just sitting at? So if I'm a trader and I've been told about this and we're coming into lunch or we're already in lunch, I want to see what this thing does at lunch. I want to see if it just consolidates and breathes. All right. It starts to pull back. It's consolidating here. All right. It puts in a double bottom. It puts in a fucking double bottom right at the initial morning high. Okay. Not only did it pull back with a decrease in volume. Yes, that candle was heavy. All right. But what I want to show you is the volume decreased. The sell volume also did not increase. If I put a line, it decreases, guys. I can raise this up for you if I have to. You see how the sell volume decreases here on the selling? This stuff you guys have to learn and be able to do this in real time. You see that? I mean, really, I should do this. All right, I'm going to make it easier so you guys can picture it. Give me the goddamn line chart. I just want to teach these fucking people. Look at this. Decrease in volume. A hold. And then what do you have? Look at that, guys. On what? You have an increase in volume and a break through the high. You had orders sitting at the initial morning high because you did that right here going into lunch. You had an increase in volume going into lunch. Traders are saying, I'm going to put my buy orders because it's $1. And they also tier in. They don't just say, I'm going to just throw $100,000 at this. They'll probably say, I'm going to put 10 grand on this. We'll see how it does. If it holds, I'll have my stop loss below this low here. All right, below that low, because that's your tail. That's where it wicked. So you're giving it, what are you giving it? You're giving it 40 cents. I don't know what the hell. See, it's so easy to click. So you're giving it 40 cents. You're giving it 6 cents to potentially make 6 cents to make 50. You know what I'm saying? That's a 5 to 1, guys. This is the stuff that traders think about. Real time. What's going on? Increase in volume through the high. It's lunchtime. Let's wait for the pullback. Let it consolidate. See if it holds the initial morning high. And we're going to get in. It pulls back. Look, it bounces. On this first bounce, I'm telling you right now, this is when orders started. They already started trying to get in after that first bounce. They're not going to get in and just massively just hop in. But they're going to, this builds the confidence because you have the increase in volume. You had a decrease in volume on the downside. It was more, okay? It was more, but it also decreased. You just had a massive run here, and it was lunchtime, and you just had traders take their profits, as they should. And you know that that's going to happen, and still, that's a million, so that's a pretty big candle. But then, guys, what happens? Look at this fucking thing. Excuse my language, but look what this thing did, guys. Look at this, and it's still going, okay? Watch for tomorrow. Watch for tomorrow. Look, puts in a new high. Puts in a new high. We bring our fib up. Again, where does it pull back to? On a decrease in volume. Look, you had an increase in volume here, guys. Through the high. Through the high, the lunchtime high. Decrease in volume. All right? And what did you guys have, guys? Look at this. Look at that double bottom. Boom. Let's show you real quick. Sorry, but this is textbook, guys, and this can start it. Look at that double bottom, and where is that double bottom put in at? The double bottom was put in at the previous high, the previous break. Do you see that? You have to picture, what are people doing? What are people doing in the moment? You just broke it on an increase in volume. This thing's going, guys. It's not done. Look right here at the volume bars. It broke the previous high. It broke it on an increase in volume. It pulls back on a decrease in volume, and then what do you get? And what else is here, guys? What else is here? The 38.2 or 23, 38.2 fib. 38.2 fib pretty much lines up. I could probably line it up a little better, but it's in the vicinity. All right, it's in the vicinity. Double bottom on the initial, the previous high that had an increase in volume on the break. Again, that's 75-80% chance that high is going to hold. And then what happened? Bang. Into the close, you're collecting your check for the week, and small caps may be in play from now on into the end of the week. All right, it takes one stock, guys. It takes one stock like this to get going, and then they all start going. And it's on. It's on to the races. This was a beautiful setup throughout the whole day. You had two double bottoms at the initial morning high. Like, you know, you had your high here. It put in a double bottom right at it. Increase in, you know, on a decrease in volume on the sell-off, decrease in sell-off on the downside, and then an increase on the break through it again. It pulls back again on decrease in volume, puts in another double bottom, and then boom. Guys, watch out for small caps. I hope this was helpful. I hope this was helpful because this is textbook. You're going to see me do this as a trade. If I get into small caps, you're going to see me do this in real time. You're going to see me do it in real time, and it's free 99. Like, share, and subscribe, guys. I really hope that this helped you. And if you guys have any questions, please put them in the chat. If you have any questions at all. All right? And then look what happened. Again, look at that. An increase in volume. An increase in volume on the breakthrough this high. This thing might be in play tomorrow. It might be. But the fact that they are up X amount of dollars, just watch it. I don't know the float. I haven't looked at the float yet. I haven't looked at the short interest. You could wake up tomorrow, there could be an offering, and then this thing is done with, no play. All right? You have to watch for an offering. You have to have hotkeys. You have to have a physical stop if you're not experienced with this stuff. And if you're not experienced, I would not recommend trading this stuff. Unless you can go through this chart and do exactly what I did, and not only do it, but do it real time. And have the confidence to pull the trigger. Okay? This is trading. And when I mean this is trading, guys, this is not just playing large caps and watching for break and retests. Because that's not going to work. As we get out of this whole volatility, like war, interest rates, we get out of this, you're going to go back to 80-cent moves in the SPY, $1.50, $2 at most. Like, it's going to get boring. This is how you become a real trader that can make money in any market. You have to be versatile or you're not going to make it. Unless you have enough capital that you can just sell spreads and you can make your money that way, and you know that you have $1 million account and you can just take 150,000, get, you know, 600,000 on margin, and you're just selling call spreads or put spreads in a bull market. You're going to get that. That's easy money. You don't have to do shit, but sit back and watch the chart and hope that it doesn't kick you in the ass. But you can also do it in a way that you can hedge yourself. So, but it takes capital. So if you don't have the capital, when the market gets boring, this break and retest and getting 8-10 points, it's going to come to a stop. I'm telling you guys. And the way to be able to keep going in the market when different market cycles is to learn to be able to identify things like this. And knowing that this is what it takes to get this type of market started, to get small caps going. Because you've had a few run, but they faded out. There wasn't, you know, the days that they decided to run, the IWM was putting in 8-10 puts, or 8 to 10 points or something. You know what I'm saying? So I just hope that helped you guys. It's important. So, again, you want to look. Where does the 38.2 line up? Right now, as I'm doing this, here's your high at 298. What lines up with the high of the day? What lines up? The 38.2 fib again. All right. Now, if we hold this 38.2 fib, you might just get a gap up and then a sell-off tomorrow. It's hard to say what's going to happen. I don't know the short float. I haven't had time to look at it. I don't even know the float. But I do know if it only takes if it takes under $200,000 to move this stock 30%, it has a short float. All right. You see, I can say short float, and they mean two different things. Okay. You have the float, the amount of shares that there are, and then you have the short float, which is the amount of the total shares that are shorted, which means they have to be returned. Let's say, for those of you that don't know and are new, you shouldn't be trading this. This is a perfect setup. You can spend $10, $15, $20, maybe $100 and practice. All right, practice with it. That doesn't hurt if you can afford to do that. All right. Most of you, I'm sure, can. I'm sure $50 won't kill you. And you learn how to do this, and you learn how to set your orders, like knowing that you should be setting your orders, and I can help you guys through that. All right. What I was saying is the 38.2 fib. I forget now. So I hope that this was useful, guys. This was textbook. This was textbook, guys. So again, like, this is why you got to use your tools. Like, what I'm going to say is I have one, like, just this high, okay? I have an increase in volume through the high of the day. That's one indicator. All right, that increase in volume through the high. I pull my fib up. My 38.2 Fibonacci lines right up with that high. That's 2. And then I pull back, and what's probably going to be there? VWAP. That might be 3. So I got three indicators lining up at the same exact price. The VWAP's not there, but if it was not after hours, I'm sure the VWAP would be there. All right. So, and I mean, look, it's just, this thing was textbook, guys. And I also think I might even have missed something. Like, if I go to the initial high, no, that's not what I wanted to do. But anyway, I hope that this was helpful, guys. This is what I want to teach. People pay and charge thousands of dollars for this type of education, guys. 38.2. Look at this. So, real quick, I know I've gone on too long, but look at this, guys. So if I just put in this high here, and I got my Fibonacci up, all right, we pulled back. We're pulling back. It starts to go. I gotta change the red because it's fucking with me. Right here is the Fibonacci. So as we go towards the extension on the increase in volume, you have the 9 EMA, you have your 38.2 fib there. It's not going to mean much on the way up, but more or less when it gets bought up and then pulls back, it drags the 9 EMA with it. And the 9 EMA is at the 38.2 fib from the previous high. That's why, do you see the size candle? See the size candle on that? And things really get going from there. Things really got going there. And they got going here too because you were breaking VWAP. Like, you broke VWAP and you went to reclaim it. So what are you going to do? You're going to want to see an increase in volume and like a nice rip through the VWAP to let them know you mean business. That's what it's going to take. And then boom. Held it. You broke it, you held it. Now we're on. Where's the 9 EMA at? We're setting our orders here. All right? Not like if we're back here, my orders are here and I just bring it up. I bring my order up. Whether the stock's there or not, I'm bringing it up. The stock starts to pull back, bang. Gets filled. It pulls back. I got my second I got my second tier because I'm seeing an increase in volume. Bang, I'm in. That's why you're seeing these candles move up in such a manner, because this is where their orders are at. And they just bring them up as it goes. Because they're not going to buy as it's extended away from it, because we know that even strong stocks pull back. Something has to hold them up. And that's the 9 EMA. And the 9 EMA is a trigger for buying or selling. All right, orders are going to be placed there. Institutional orders are placed there. I assure you that. I know they are. That is why it touches it, bounces off, pulls back, touches it, bounces off, pulls back, touches it, bounces off. Because this is where your orders are sitting. This is where your buyers are. They're not buying here and then their order's red as soon as they buy it. That's an inexperienced trader, and then they're getting nervous, and then they sell. And they're like, man, I got to find a better entry. Like, it might go down. Bang, it holds VWAP. Look at that tail. Not VWAP, but 9 EMA. Look at that tail, guys. So again, I hope I helped you guys. If you could put something in the chat, maybe. If not, that's okay. That you guys got it. And if you guys have any questions about this, type it in the chat, man. I'd be happy to help. But that was this. I seen this, and as I started looking at it, like, as soon as I seen the chart, it took me 2 seconds to say, this was a really good fucking trade today if I seen it. All right. I was a little tired. I'm not giving excuses. I just didn't look for it. I didn't look for it. I looked a little bit, but this was a beautiful setup. And I'm telling you right now, this could be the start of some things to come for the rest of the week into next week. Now, in the next week, I don't know. Because you also get Powell and you get CPI and everything, and I think the focus there is going to be on the overall markets instead of small caps. Not to say that something, not to say that they still can't pop off, because the market can go and small caps can go. I've seen it. But typically it's when the market's slow, it's like where are the traders going to make their money? And then, small caps start taking off, man. I appreciate you, Colin, man. You have a great night. I hope that was helpful, man. Do you see what the message I was trying to bring is? Like, when you buy, knowing where to buy, knowing where to sell, knowing what to look for to help reassure you that you're making the right decisions. You know what I mean? So this, like, you get a stock that extends. Now, real quick, before we go, if you get this, and you'll get this in any kind of stock, like the SPY. The SPY didn't fuck with VWAP all day. So the VWAP is not in play. You got to find what indicator or where is the buying and where is the selling. That is the price action. Like, price action is where is the buying, where is the selling. You had a mix. Like, look at the 9 EMA. It didn't, in the morning, it was, the 9 EMA was not in play. Now, guess what? There's a lot to this stuff, guys. You're going to learn it over time. What do we have here? We have a VWAP. We have the trade line VWAP cross. Trade line VWAP cross. So look at this bar. Look at this bar. Look at this bar. It's not paying attention to VWAP or the 9 EMA. So when do the candles start to use either VWAP or 9 EMA? They're not doing it here. They don't give a shit about VWAP or the 9 EMA. But when do they care about it? Literally. Bro, this shit comes with levels. Okay, there's levels to this shit, guys. What happened there? Your trade line crossed VWAP. What do we have here? What do you have here? You have an increase in volume through VWAP. It brings the 9 EMA up, and then what happens, guys? It starts using trade line as a buying point. Do you see that? That's also another lesson. Like, look for the trade line VWAP cross. You can do it on the downside as well. You can do it on the downside. Now, if you're doing on like let's say like a large cap like AMD or something, you typically don't want to have the pre-market on unless the move has started pre-market. Like, if there was news or something that started pre-market, like came in at like 8:30 in the morning, 7 o'clock in the morning, and then the stock started, then yes. If not, because what happens is you're going to have this time distorts your VWAP, your 9 EMA, even like the 50-100. The more time that there is, it prices in more time. But there's like no price action here. So you want to eliminate that, because you didn't have to, because, it's not trading from 8:30 to 4 in the morning until trade. Obviously, this thing didn't open up until 8 o'clock in the morning. So this stock is different. But if you get stocks that open up at 4 in the morning and close at 8 o'clock at night, you need to decipher whether you should have pre-market on or not. And as you become a better trader, you're going to realize when you should and shouldn't. And the basic principle is if the news or the movement really started before, like pre-market or aftermarket. Is that when it started? All right. I just wanted you guys to know that, though, because that's also important, because that's gonna give you, like, your VWAP is gonna change. Your trade line and your VWAP, they're going to be at different places. They're not going to be far off, but they're going to be, there's going to be this time factored into it. This time here, the pre-market, is going to be factored into, like, what happens that day. And then as you get further into the day, it's adding more in. Like, that little bit gets added into the whole day, and it could distort where your buy order should be and shouldn't be, and your sell order should be and not be. Look at the sell, guys. What happened after market? Because you can do it on the downside too. They started selling below VWAP. They started putting their sell orders under VWAP. As it broke it and started trending down, like, they were still trying to buy this thing, in hopes tomorrow things start, go on and continue. They started making VWAP their sell point, roughly. And then it got late. People made money. Obviously things die off and then nothing. So you have to know when the 9 EMA works, when it's in play, when the VWAP is in play. The biggest thing, again, your trade line VWAP cross, guys. As you can see here, the trade line did not come into effect until it crossed VWAP. Trade line VWAP cross is so important because I also guarantee you, if I were to put my Fibonacci right here, I'm going to have the 50% retracement. 38.2 I don't think is there, but the 50% retracement will line up here. That's 3 indicators: VWAP, 9 EMA, increase in volume. So I hope that helps, man. Like that, this is the shit that gets me going. That right there. And doing it real time. You know what I mean? And being able to perform. And don't think you're going to get this stuff overnight. You got to practice. Use just small amounts. If you don't know how to trade it, use small amounts. Learn how to put in your stop losses. Learn how to do the math on where your stop loss should be and add the difference on your risk. If you're going to risk $100, $500, $1,000, if you got 12 cents is your stop loss, how many shares do you need to buy so that when 12 cents hits, you're out your 100 or 300? And it doesn't, you don't have to wait for it to just take your stop loss and do this and that. You can tell price action over time. When you become a better trader, you're going to be able to tell when you're right and wrong, and you're going to be able to cut it sooner. And you're not going to be right all the time, but like, if as we go on with this channel, guys, you guys are going to be able to see me. Wait for the days when SPY really gets going. I'm going to tell you right now, I'm going to call that son of a bitch from 9:30 in the morning till 4 o'clock at night. Okay, I've done it over and over and over and over and over and over again. I just know it. I've just been doing this a long time. I feel the music. I know as candles are doing their thing with level 2 in the tape, I just know whether it's going to break or if it's going to hold, you know, and that's why I didn't do anything really this week. I have so much going on, and obviously the market does too. The market's waiting for next week. Now, tomorrow and Friday, we might get something different, guys. I hope you guys enjoyed that. This was a really good lesson, man. And again, this is what makes a trader. Not just sticking to one thing. You got to be versatile in this market. You got to be able to short. You got to be able to trade small caps, mid cap, large caps, because different cycles of markets are going to be in play at different times. All right. So that's all, guys. I appreciate you guys being here. I hope you guys learned something. We're going to see what tomorrow brings. This doesn't mean that small caps are going to kick off, but I'm going to tell you right now, the possibilities have started. I'm just going to throw up, we'll say Farm and Yex. Let's look at Farm and Yex to see if they started doing anything as this stock took off. Okay, and that'll kind of give us a sign. But again, it takes traders away. Now, I don't know the float on this. So, and what was the other one? Let's just see if they're starting to. That's what I'm going to do on here because I got to do it anyway. Yex, YEXT. YEXT, also got to look at the volume. Not necessarily. And again, I don't expect these two because all the attention was obviously drawn to the stock we were just at towards the end of the day. Let's look at something with, YEXT. Okay. YEXT. I need something with some real volume. Like, here you go. MOBQ. This is the volume you want, guys. MOBQ. Especially for a 19-cent stock. You need this. All right. You need that 177,000, 2 million share volume. You need it. Because I'm telling you, people, I personally know them. You know, they have stop losses for 5,000. They're buying 50,000 shares, 100,000 shares, guys. And they're not getting in. Again, they're not getting in unless they have like a million and a half, 3-minute candle. Then they wait for the pullback to the 9 EMA, and that's when things get started. So knowing what other people do, this is the psychological aspect of trading, knowing the actions that are being taken and lining yourself up and doing the same and putting yourself on the right side of probability. That's how you make money at this shit. This is how you're able to do it for a living. This is how you don't make $400 one day and lose it the next. All right? I haven't seen nothing. I haven't done nothing. You know, I did buy SPY puts, but I also didn't force a trade and lose it. You know, so this is like my uncle, just people that say the market's a scam. No, they have not been educated. They have not been educated. I just proved it with the trade line VWAP cross when things started. Volume 38.2. You know, the decrease in volume on the way down, put in a double bottom at the previous high. The previous high lines up with the 38.2. You get an increase in volume off of the 38.2 fib, which lines up again with the previous high. Like, I just know this shit like the back of my hand because I've done it for so long. But people lose money because, one, they don't know anything about risk management. They have no idea even what the hell it is. They hear it, but they don't know what it is. They can't go into this stock and say, I'm going to risk $1,000 and give it a 10-cent stop and know how many shares to buy, because they don't want to put in the calculator. The calculator I have right here, because this is what I do. All right? I mean, I'm so passionate about this shit, man. And it fucking irks me when people say the market is a scam. No. You have just been scammed by somebody else that doesn't know what the fuck they're doing. Excuse my language. But again, it really irritates the shit out of me. So I'm going to look at this MOBQ. And again, it had 177 million shares traded. And then I'm out of here, guys. I hope that was a good lesson. And if anybody tells you the market's a scam, then you need to tell them that they got bigger problems than they even know about. That they need to just come here or tell them, give them my phone number. I'll have them come hang out with me, and I'll prove them wrong on a daily basis. Yeah, this thing was junk. This thing was shorted all day. I actually had that feeling when it said it was at 19 cents. So I was like, 19 cents. You know, because a lot of these traders won't go in at 19, 20 cents, even $1. Now you start getting to like $3, $4, $5 stocks. That's when a lot of them start coming in. But it's hard to get the big boys coming in on $1 stock. They will, but again, if they are trading 100,000 shares, they're going to make up a candle themselves, and they don't want to get stuck with it. So float volume is important. MOND. So that's about it. We're going to see what happens tomorrow. We will see what happens tomorrow. I'm looking on here. I don't see any. Doesn't seem like. I feel like because MGOL popped off at the end of the day is why you didn't. Is why you guys didn't see like you don't see a lot of these like start or random ones that you don't even know about. MGOL. I just want to put this up here. But dude, guys, again, I hope this was a good lesson for y'all. It's textbook. This is a textbook trade, guys. MGOL. I just want to look at FRZA because I know that one wasn't. But see, look, here you go. FRZA. What time is it? You son of a bitch. Of course you're gonna fuck with me. All right. What time is it? It's late. We got to go to bed because we got to be up early. It's 11 o'clock. So it's 2 o'clock. And then go look at MOGB, whatever. It broke the high. Look, it sent FRZA up. Sent all, like, after lunch at 2 o'clock, 1400, 2 o'clock, this thing started to make a new high with the other stock because this stock was in play on Monday. So you can use these as sympathies. You know, you want to make sure it has the that it has the volume to get with it, and it's going to move with it. This is knowing, like seeing this right here, and me going to FRZA, this random ass stock. You know, this type of stuff you're going to get as you become better and you get more time in the markets, and you're taught. You would have not known to do this. You would have probably not known that this stock was in play Monday and it just had a failed breakout and it just never continued. You know, I watched it. Like, look, see what I mean? This thing took off in the afternoon, had a little bit pre-market, and then just like really didn't do much. And actually started to roll over. Come on, you son of a bitch. God damn it. See what I mean? It started last week and then into Monday. Right here. This is Monday, right? Monday, Tuesday, Wednesday. So I was watching this. This was Friday afternoon. I remember it. And then, you know, like I say, it just never brought any follow through. And then traders like, look, see the volume decreasing? Like how you can't even see it no more. So this stock will be on watch. Because it right there, 2 o'clock, you know, right with the other one. That's all it takes is one nice trade like that, and then short people that are short these stocks, they're going to start covering, and the scanners are going to go nuts. And my Squawk Box, I can turn it down or I can have it playing, but it's going to go nuts. It's going to say new highs here, new highs there. So, guys, I love you. I appreciate everything. Thank you guys for hitting the like button and whatnot. You guys have a great night, man. That was a good lesson that I felt could be taught. So, again, I appreciate you guys. I really do. Let's get some sleep and get at it in the morning.